Hello. In this session, we'll be looking at how to structure your answer. What are the points that need to be included to get maximum marks? And also, we will be doing this in context of a exam style question. So the question here that I have taken is Vestra Energy Limited. Always remember that whenever you're doing these type of questions, read the requirement first so that you will be able to spot the question and the required material to answer that question in the given scenario. So here the requirement is that discuss whether revenue from the service phase and the grant of license to a customer are separate performance obligations or a single performance obligation. Second question is whether the revenue should be recognized at a point in time in accordance with IFRS 15 revenue from contract with customers. And second part of the question is explain the ethical issues for the finance director, setting out how the issues may be resolved. There are professional marks awarded for the answers in part B of the question. So please understand the requirements here. First is to understand what are the performance obligations. Second part is to identify whether revenue is to be recognized at a point of time or over time. Let us quickly go through the question here. Background. Vestra Energy Limited operates in the oil and gas exploration sector. The following exhibits provide relevant information for addressing the question's requirement. So, license granting process and ethical consideration. So, part A of the question would be from this area of the question, case study. So, Vestra Energy Limited assists its clients in assessing the viability of the oil reserves with specific geographical areas. Typically, clients enter into agreements with the company before the exploration survey begins, eventually leading to the purchase of the license to search for the oil. So the contract is there, but the agreement is there and it ends once they purchase the license. Now this is divided into two parts. First is the service phase. So during the initial phase of the contract, Vestra Energy gathers geological data from the selected site over the course of 1 year. This data is then analyzed and interpreted over the following 6 months. So the data collection and interpretation takes 1 year, 6 months, right? It's a part of the agreement. The survey area is selected solely by Vestra Energy, which also owns both the data and the land being surveyed. So the control is with Vestra Vestra Energy. The resulting data is compiled into the final survey report, which is provided to the clients. The customers cannot use the data or obtain the license without Vestra Energy's approval. The primary value to the client lies in the acquisition of the license rather than the raw data. So even if the data is generated, processed and given to the customers, the customer cannot use it. The value to the customers lies in getting the license. So the raw data is of not any use to the customers. Please understand the scenario. Although interim reports and presentations are shared with the customer throughout the data collection process stage, full data access is only granted once the final report is delivered. At this point, the client decides whether to invest in the area. License issue. Clients have the option to withdraw from the agreement upon receiving the final report. However, the full contract price, including the license fee, remains payable to Vestra Energy. So whether they take the license or not, they have to pay the license fees. In practice, clients do not usually exit at this point. The license is officially granted at this stage and no additional analysis or services are provided thereafter. So please understand the time frame. From year 1 to 6, data gathering, data processing is done, and then they come to a conclusion whether oil is available or not, and that report is submitted to the client. The client then decides whether they want the license. Whether the client takes the license or does not take the license, they have to pay the full amount to the entity, that is Vestra, right? Vestra Energies. And the performance obligation gets completed when they grant the license to the client. The board of Vestra Energy has concluded that the contract contains a single performance obligation, namely the granting of the license upon completion of the survey. This is because the data collection and processing are integral components of delivering the final license and do not provide stand-alone value. The license is based entirely on the data generated during the service phase. Now let us understand how to structure your answer. So I have explained here the steps that you need to follow. First step is always to understand the requirement. So the question here is asking you to discuss the number of performance obligations in the contract and if the revenue is to be recognized over time or at point in time. Second is the steps in the revenue recognition that you should focus on here is to identify the performance obligation and when to recognize the revenue. The third is marks are available for relevant principles from IFRS 15. So you should always start with applying or outlining the concepts of IFRS 15 and then move on to the application of the principles. Now look at the way I have structured the answer here. So first you have to mention or outline what are the principles under IFRS 15. So the principles under IFRS 15 related to performance obligation is what I am enumerating here. So as per IFRS 15, revenue from contract with customers, performance obligation is a promise to transfer to the customers goods or services or a bundle of goods or services that is distinct or a series of goods and services that are substantially the same and are transferred in the same way. So this is what IFRS 15 says about performance obligation. So if a promise to transfer goods service is not distinct from other goods and service in the contract, the goods and services are combined into a single performance obligation. So a good and service is distinct if both of the following criteria are met. So you are writing exactly what IFRS has principles state, right? So they are distinct if the customer can benefit from using the goods and services on its own or when combined with the customer's other resources. And the promise to transfer goods and services separately identifiable from other goods and services in the contract. For example, I had explained in the initial video as well how to distinguish whether the goods are separate performance obligation or a bundle of performance obligation. Going ahead, the factors that indicate that transfer of goods and service is separately identifiable is first, the goods and services are not integrated, they are not interdependent with other goods and services in the contract. And secondly, the goods and services does not highly depend or relate to the other goods and services in the contract. Now coming to the scenario, these are the principles. Now I am applying these principles to the given scenario. In the given scenario, the final license provided to the customer is highly dependent on the data that is collected and processed during the course of the service phase. The data and the processing on its own is of no use to the customer as the customer cannot use it and the license will be granted by the Vestra Energy itself. So for the customer, the data or the processed data or the reports on their own does not add any value. So there is no value added to the customer before the survey is completed and the final report is presented. And the customer cannot process the data by themselves, right? So therefore, the revenue should be recognized so there is only one performance obligation, that is the service of collecting, processing data and granting the license is grouped as or bundled as only one single performance obligation, and your performance obligation gets complete the moment you grant the license. Therefore, the revenue should be recognized at a point when the license is granted or when the contract is exited. It should be recognized as a single performance obligation as service phase component does not have any significant value. The customers of Vestra Energy contract for combined goods or services, which includes the survey data, processing, granting of the license. So these are not separate performance obligations and are combined together. So first you have mentioned whatever IFRS 15 says, then you have applied those concepts to the given scenario. So that should be ideally your plan or structure of answer. Going to the next part, that is the ethical consideration. Now look how to plan for the ethical consideration. In this case, there are many ethical issues, and read each paragraph carefully and identify the ethical principles that have been breached, and then also explain why. Okay, so if you look at the first paragraph here, Vestra Energy employs advanced data analytics proprietary algorithms to assess the likelihood of discovering oil at a specific locations. The Chief Data Officer is well versed with the statistical model and is skilled at explaining the results to the client. The Finance Director, Mr. Lauren Evans, is a qualified accountant but has limited understanding of the underlying technology. Mr. Even believes that he does not need to fully grasp the data process so long as the Chief Data Officer is proficient, and Chief Data Officer reports directly to the Finance Director. So point number 1, ethical breach. Mr. Lorne Evans is not updated with the knowledge, right? Big data and algorithms form a major part of the operations for Vestra Energy. The appointment of Chief Data Officer ensures that there is accountability within the company. The accountant need not know everything in detail. They may not possess the necessary skills to take on the responsibility. But the Finance Director has limited understanding of the underlying technology, which he should have maintained the necessary skills and experience to carry out his role as a Finance Director effectively. So this is an example of lack of professional competence, and the Finance Director should maintain professional knowledge skills at the required level. Next is, recently a set of survey data revealed how low probability of oil being found at a particular site. However, Mr. Evans instructed the team to reprocess the data by including outdated historic data, which resulted in a more favorable outlook for the client, Terraline Explorations. Now this again is a ethical breach, right? So when the outcome was not positive, okay, or not as per required, so what Mr. Evans, the Finance Director, said, he instructed to use the historic data which was outdated to get a positive outcome or the required outcome. So when the recent surveys revealed the low probability, use of historic data to manipulate the outcome is unethical. And also in doing so, he was putting pressure on the Chief Data Officer to get the positive or the required outcome. So the fundamental principle of integrity is breached in this case. It is the duty of the accountant to be straightforward and honest in all professional and business relationships. So this would also appear to be self-interest on the part of Mr. Evans, right? Going on to the next paragraph. It later emerged that Mr. Evans had a personal connection with Miss Naomi Trent, an accountant at Terraline Explorations. Miss Trent had reached out to Mr. Evans for advice on accounting treatment for granted license. Mr. Evans recommended applying IFRS 16, asserting that the license represents a right of use asset. He also informed Ms. Trent that the share price of Terraline Explorations could decline due to poor original data result, knowing she held the shares in the company. So in this paragraph, there are two unethical issues. First is that he has advised Ms. Naomi to treat this transaction as per IFRS 16. So advising the account of Terraline Explorations to account for transactions by applying IFRS 16 is another example of lack of professional competence. IFRS 16 specifically excludes licenses from the scope of IFRS 16. So Mr. Evans has demonstrated lack of due care, poor professional behavior, which could discredit him and the entity. Secondly, in addition to the above, Mr. Evans has also hinted that the shares of Terra Lane could fall because of the wrong outcome, or because of the falsely showing that it's a positive outcome, right? And there is no oil there. So in addition to all of the above, Mr. Evans knows that Miss Naomi holds shares in Terra Lane Explorations and has suggested that the share price may fall because there is little chance of finding the oil. He disclosed a confidential information not accessible to the other shareholders or the investors, giving his friend an unfair advantage, which is ethically immoral, right? So these are the ethical issues that you need to highlight. Now coming to the last part here, the professional marks will be awarded here for the discussion regarding the resolution of ethical issues. So where professional marks are concerned, what you need to do is to score the professional marks. Once the ethical issues are identified, suggest ways to resolve it, because they have said discussion regarding resolution of ethical issues, right? Because they have specifically mentioned it. Now Mr. Evans should try and identify parties that are affected by his actions, lack of expertise. He should discuss his lack of knowledge with the directors of Vestra and the potential consequences to the business. And during this whole resolution process, he should keep a proper documentation of all the discussions that have happened regarding this ethical issues. So this will give you good marks, and I'm sure you'll be able to form your own answers in this manner. Thank you.